Good morning, class. Good morning, student. This is your faculty and coach for the subject business environment, and I'm over here again with you all in order to go ahead with the topic. Students, we will be discussing. We are almost on the last stage of our content. Today, we will be discussing an important topic related to the global environment with respect to the Indian acts and over here, and we'll be studying about the Foreign Exchange Management Act, in which we'll be discussing about various things. We'll be understanding that act, which is also called as FEMA, FEMA, Foreign Exchange Management Act. In this act, we'll be understanding about their objectives, holding of foreign exchange, then about the current account transactions, about capital account transactions, about the export of the goods and services, about the realization and recreation of the foreign exchange, then conventions and penalties, administration of the act, about FARA and FAMA, and a small comparison. So moving ahead to this particular topic, we'll proceeding over here like this. In the Foreign Management Act, we'll be studying about the regulation of the foreign exchange transactions, about the Foreign Management Act, about the FARA and FAMA, and a comparison. So regarding this part, the regulation of the foreign exchange transactions, the foreign exchange transactions were regulated in India by the Foreign Exchange Regulation Act FARA in 1973. This act also sought to regulate the certain aspects of conduct of the businesses outside the country by Indian companies and in India by the foreign companies. The FARA was widely described as a draconian and the obvious law. Following the economic liberalization ushered in 1991, some amendments of the FARA were effected in 1993. The main objective of the FARA, framed against the background of the severe foreign exchange problem and the control economic regimes, were conservation and the proper utilization of the foreign exchange resources of the country. There were a lot of demand of the substantial modification of the FARA in the light of the ongoing economic liberalization and improving the foreign exchange reserve positions. Accordingly, a new act, the Foreign Exchange Management Act FAMA 1991, replaced the FARA. Then Foreign Exchange Management Act, the FAMA, which came in effect from January 1, 2000, extend to the whole of India and also applies to all the branches, offices, agencies outside the India, owned and controlled by the person residents in India. The main objective of the FAMA are first to facilitate the external trade and the payments. Second is to promote the orderly development and the maintenance of the foreign exchange market. Dealing in the foreign exchange management, foreign exchange, etc. Under the Section 3 of the FAMA, which imposes the restriction on dealing in the foreign exchange and foreign security and the payments to and the receipts from any personal outside India, according to this, except as provided in the terms of the Act or with the journal or the special permission of the Reserve Bank, no person shall first deal in any foreign exchange or the foreign security with any person other than an unauthorized person. Second, to make any payment to or for the credit of any person residents outside India or in any manner. Third is to receive otherwise through the authorized person or payment by order or on the behalf of any person residents outside India or in any manner. D. Enter into any financial transaction in India as a consideration for or in association with the acquisition or creation or transfer of a right to acquire any assets outside India or by any person. Further, same as otherwise provided in this act, no person residents in India shall acquire, hold, own, possess, or transfer any foreign exchange security or any immovable properties situated outside the India. Thus, the holdings of the Foreign Exchange Act. Same as otherwise provided in this act, no person residents in India shall acquire, hold, or possess to transfer any foreign exchange, foreign security, or any immovable property situated outside India. Thus, the current account transactions. The FAMA permits dealing in the foreign exchange through authorized persons for current account transactions. However, the central government can impose reasonable transactions in public interest. The capital account transactions, any person may sell or draw the foreign exchange or to or from an unauthorized person for the capital account transactions permitted by the Reserve Bank in consultation with the central government. Thus, the RBI may, however, without prejudice to the generality of this, prohibits restrictions or regulate the transfer. A transfer or issue of any foreign security by the person residents in India. Second, the transfer or issue of any security by the person residents outside India. Third is the transfer or issue of any security or foreign security by any branch, agency, or office in the India of a person resident outside India. D is any borrowing or lending in the foreign exchange in whatever form or by whatever name is called. E, any borrowing or lending in rupees in whatever form or by whatever name called between a person resident in India and a person resident outside the India. F, deposit between the person's residence in India and the person resident outside India. G, export, import and holding of the currency or the currency exchange notes. F, about deposits between the person residents in India and the person resident outside India. G, export, import and holding of the currency or the currency notes. H is about the transfer of the immovable property outside India other than lease with not exceeding 5 years by a person resident in India. I is about the acquisition or the transfer of the immovable property in India other than a lease not exceeding the 5 years by a person resident outside India. J is by giving a guarantee or surety in respect of any debt, obligation or any other liability incurred. First is by a person resident in India and owed to the person resident outside India. Second is by a person resident outside India. Thus, a person resident in India may hold, transfer or invest in the foreign currency, foreign security or any immovable property situated outside India in such currency, security or property was acquired, held or owned by such person when he was resident outside India or inherited from a person who was resident outside India. A person resident outside India may hold or transfer or own or invest in the Indian currency, security or any immovable property situated in India if such currency, security or property was acquired, held or owned by such person when he was resident in India or inherited from a person who was resident in India. Thus, the Reserve Bank may prohibit, restrict or regulate the establishments in India of a branch, office or other places of a business by the person resident outside India for carrying out on any activity relating to such branch, office of other places of the businesses. The Reserve Bank shall not impose any restriction of the withdrawal of the foreign exchange for the payments due to on the account of the amortization of the loans or for the depreciation of the direct investments in the ordinary course of businesses. Next is about the export of the goods and services. Every exporter of the goods shall first furnish to the Reserve Bank or to such other authority a declaration as specified containing true or the correct material particulars, including the amount representing the full export value, or if the full export value of the good is not exceeding at a time of the export the value which the exporter may regard to the prevailing market conditions expect to receive on the sale of the goods in the market outside India. Second is to furnish to the Reserve Bank such other information as may be required by the Reserve Bank for the purpose of ensuring the realization of the export which proceeds by such exporter. For the purpose of ensuring that export value of the goods is received without any delay, thus the Reserve Bank may direct any exporter to comply with such requirements as it deems fit. The exporter of the services shall furnish to the Reserve Bank or to such other authorities a declaration as specified containing the true and the correct material particulars in relation to the payment for such services, the realization and the repatriation of the foreign exchange. Where any amount of the foreign exchange is due or is accrued by any person, he shall take all reasonable steps to realize, repatriate it to India within in time or in the manner prescribed by the RBI. Several exemptions are, however, granted to this clause. First is the contravention and the penalties. Under this chapter, the penalty of any kind of the contravention under the Act is liable to a penalty up to the thrice the amount involved where it is quantifiable, or up to rupees 2 lakh where it is non-quantifiable, and where such contraventions is continuing. One, further penalty which may extend to 5,000 rupees for every day after this the first day during which the contravention continues. This provision is in total contrast to the respective provisions and in the erstwhile FARA which provided for the imprisonment and no limited of fine. Under FAMA, a person will be liable to the civil imprisonment only if he does not pay the fine within 90 days from the date of the notice, and that too after the formalities of the showcase notice and the personal hiring. If he does not respond to the notice, there shall be a warrant of arrest. Next is the administration of the Act. The FAMA has assigned an important role of the Reserve Bank of India in the administration of this Act. The rules, regulations, and the norms pertaining to the several sections of the Acts are to be laid down by RBI in consultation with the central government. The Act requires the central government to appoint as many officers of the central government as adjuncting authorities for holding inquiries pertaining to the contravention of the Act. There is also a provision for appointing one or more special directors appeals to the hear which appeals against the order of the adjuncting authorities. The central government shall also establish an appellate tribunal for the foreign exchange to hear appeals against the orders of the adjuncting authorities and the special director appeal. Thus, the FAMA provides for the establishment by the central government of a director of the enforcement and with the director and such other officers or the class of the officers as it thinks fit for taking up the investigation, the contraventions under this act. Then about FARA and FAMA comparison, there is an important difference between the FARA and FAMA, and which can be summed up as follows. First is FAMA, only the specified act relating to the foreign exchange are regulated, while in FARA, anything or everything that has to do with the foreign exchange was controlled also. The aim of the FAMA is in facilitating the trade as against the FARA, which was to prevent misuse. In other words, the theme of the FARA was everything that is specified is under the control, while the name of the FAMA is everything other than what is expected is covered is not controlled. Thus, there is lot of deregulations. Many provisions of the FARA, like the one relating to the blocked accounts, there's the Indian taking up the employment abroad, employment of the exchange technicians in India, contract and vision of the act with vacacious search, culpable mental state, etc., have no appearance in FAMA. Thus, to summarize, the Foreign Exchange Management Act FAMA 1999 replaced the Foreign Exchange Regulation Act FARA 1973, which regulated the foreign exchange transactions in India and which sought to control the certain aspects of the conduct of the business outside the country by the Indian companies and in India by the foreign companies. Thus, the FAMA, which came in the and also applies to all the branches and offices and agencies outside India owned and controlled by the person residents in India. Thus, the objective of the FAMA are to facilitate the external trade and the payments and to promote the orderly development and the maintenance of the Foreign Exchange Act. Thus, the Reserve Bank of India is assigned an important role in the administration of this act. The FAMA empowers the central government to impose the restriction on dealing in the foreign exchange and the foreign security and the payments to and the receipts from any person outside India. This act imposes the restriction on the person residents in the India and on the transfer of the foreign exchange or the security abroad. Thus, the FAMA, which lays down all dealings in the foreign exchange or the foreign security and all the payments from outside the country or dealing for India shall be made through authorized persons except with the journal or the special permission from the RBI. Thus, the Act also prohibits any payment outside India except that of the journal or the special permission of the Reserve Bank. The FAMA permits dealing in the foreign exchange through authorized person for the current account transactions. However, the central government may impose reasonable restrictions in public interest. Any person may sell or draw the foreign exchange to or from the authorized person for the capital account transaction shall be permitted by the Reserve Bank. However, the Act empowers the RBI to impose the number of restrictions on the capital account transactions. Thus, the FAMA permits a person resident in India to hold, own, transfer, or invest in the foreign currency, the foreign security, or an immovable property which is situated outside India if such currency, security, or the property was acquired, held, or owned by such person when he was resident outside from India or inherited from a person who was resident outside of India. Although a person resident outside India may hold, own, transfer, or invest in Indian currency, security, or any immovable property situated in India, if such currency, security, or the property was acquired, held, or owned by such a person when he was resident in India and inherited from a person who was resident in India. Further, the Reserve Bank is empowered by its Act to prohibit the restrictions or to regulate the establishments in India or by the branch offices or other places of India of the business by a person resident outside the India for carrying or any activity relating to such branch offices or other places of the businesses. However, the RBI shall not impose any restriction or the withdrawal of the foreign exchange for the payments due on the account of non-impose of any restrictions or the withdrawal of the foreign exchange for the payments due on the account of the amortization of the loans or for the depreciation of the direct investments in the ordinary course of the business. Thus, this act requires the exporters to furnish the Reserve Bank or to such other authorities certain dealings regarding the exporters. For the purpose of ensuring the export value of the goods is received without any delay, the Reserve Bank may direct any exporters to comply with such requirements as it deems fit. Where any amount of the foreign exchange is due or acquired to any person, he shall take all reasonable steps to realize and repatriate it to the India within the time and in the manner to prescribed by the RBI. Several exemptions are, however, granted to this clause. Under this chapter, the penalty for any kind of contravention under the Act is liable to the penalty up to thrice the amount involved where it is quantifiable, or up to rupees 2 lakh where it is non-quantifiable, and where such contradiction is continuing, one further penalty which may extend to rupees 5,000 for every day after the first day during which the contraventions continues. Thus, this provision is in total contrast to the respective provisions in the erstwhile FARA, which provided for imprisonment and no limit of the fine. Under FAMA, a person may be liable for the civil imprisonment only if he does not pay the fine within 90 days from the date of the notice, and that too after the formalities of the show cause notice and the personal hearing. If he does not respond to the notice, there can be a warrant of arrest. Thus, an important difference between the FARA and FAMA is that while in FAMA only the specified act related to the foreign exchange was regulated, but in the FARA, anything and everything that has to do with the foreign exchange was controlled. Also, the aim of the FAMA is facilitating the trade as against the FARA, which has to prevent the misuse. In other words, the theme of FARA was everything that is specified is under control, while the theme of there are further references which you can see now. In order to see more, there are few annexures under the Foreign Exchange Management Act. The first is about the definition, the meaning, and some important terms used in the FAMA are given below. The foreign exchange means the foreign currency, which include the deposits, credit, balance payables in the foreign currency. It includes the draft and also include the credits, balances payable in the foreign currency, draft, traveler's check, letter of credit, or the bills of the exchange expressed or drawn in the Indian currency but payable in any foreign currency. The draft, traveler's check, letter of credit, or the bill of exchange drawn by the bank, institution, or the persons outside India but payable in the Indian currency. Second is about the foreign currency. The foreign currency means any currency other than Indian currency. Third is foreign security. The foreign security means any security in the form of shares, stock, bond, debentures, or any other instruments denominated or expressed in the foreign currency, and which includes the securities expressed in the foreign currency, but where redemption or any form or return of such an interest or the dividends is payable in the Indian currency. Next is about the person. The person includes an individual, a Hindu, undivided family, a company, a firm, an association of the person of body of the individuals, whether incorporated or not. Any agency, office, or the branch controlled or owned by such person. The persons resident in India means the person resident in India represents a person residing in India for more than 182 days, living and growing during the course of the preceding financial year, but does not include a person who has gone out of India or who stays outside India. In either case, has gone out of India or a person who is taking up the employment outside the India, or for carrying outside India a business or a vocation outside India, or for any other purposes in such circumstances as outside indicated by the intention to stay outside India for an uncertain period. Second, a person who has come to or stay in India is either is a case otherwise then for taking up the employment in India, or for carrying up the India a business or vocation in India, or for any other purposes in such circumstances as would indicate his intention of stay in the purpose for an uncertain period. Thus, third, any person or the corporate body which is registered or incorporated in India. Fourth is a registered office, branch, or agency in India owned or controlled by the person resident outside Indian office. Next is about the office, branch, or the agency which is outside India owned or controlled by a person resident in the Indian office. Thus, the person resident outside India, it represents a person who is not a resident of India, whereas when we talk about the service means the service of any description, which is made available to the potential users and include the provision of the facilities in connection with the banking, finance, insurance, medical assistance, legal assistance, chit fund, real estate, transport, proceeding, supply of electrical or other energies, broadening or lodging or both entertainment, amusement or purveying of the news or other information, but does not include rendering of any services free of charge or under the contract of the interpersonal services. Second is the authorized person. When we talk about the authorized person, it means authorized dealer, money changer, offshoring banking unit, or any other person for the time being authorized under the Act to deal in the foreign exchange or the foreign securities. Next is about the currency. The currency includes all currency notes, postal orders, money orders, checks, drafts, traveler checks, letter of credit, bill of exchange, the promissory notes, credit cards, or any other such similar instruments as may be notified by Reserve Bank of India. Next is about the current account transactions. The current account transactions represent the transactions other than the capital account transactions and without the prodigious of generality of the foreign foregoing such transactions, which include the payment due to the connection with the foreign exchange or the other services, or due to the short-term banking or the credit facility in order to include of the businesses. Second is the payment due as interest of the loans and in the net income from the investments. Third is about the remittances for living expenses of the parents, spouse, children residing abroad. Next is about the expenses in connection with the foreign travel, education, and the medical care of the parents, spouse, and so this is all about the FEMA, Foreign Exchange Management Act. So in order to summarize it up over here, that is Foreign Exchange Management Act, then we have studied about the Foreign Management Act. We have even studied about the transactions, nature of the transaction that includes the current transaction, the capital account transactions over there. We have studied about the export of the goods and services. Then we have studied about the realization and the repatriation of the foreign exchange, the contravention and the penalties of the administration of the act. Lastly, we have compared between the FARA and FAMA, in which FAMA represents Foreign Exchange Management Act and FARA represents Foreign Exchange Regulatory Act. And later on, through the annexes, we have seen few definitions and the concepts related to the residents of India, residents outside India, and the other terms and terminologies. So this is all about the Foreign Exchange Management Act. So this is your faculty and coach Vivek Burda from Tirthankar Mahabari University. For any doubt, any query, you can get back to us on our ID vivekb.management@tmu.ac.in. And those who are focusing on, request you to refer the extra study materials also.